Thank you so much for everyone present here today. I must say I envy you guys in Trondheim quite a lot from lockdown Oslo here. Looks very nice to be able to meet physically. So yeah, we're here today to discuss a timely and important topic, and I'm very happy that the Students Association in Trondheim wanted to work with us to set up this panel discussion here today. We're going to talk about how the COVID pandemic has wreaked havoc on the world economy, and that developing countries have been hit especially hard by the economic downturn. It is estimated that 100 million more people will enter extreme poverty due to the economic consequences of the pandemic. And as a consequence of the last financial crisis of 2007-2008, a large number of developing countries had accumulated unsustainable debt levels the last 10 years before the COVID pandemic. And this put countries in a precarious situation when the economic crisis set in. Countries with already unsustainable debt levels have to finance expensive crisis measures with new loans. And this, of course, contributes to exacerbating already existing problems. And in order to solve the upcoming debt crisis, all creditors have to contribute to debt restructurings. And at this moment, one of the biggest obstacles to reinstating debt sustainability is the unwillingness of private lenders to contribute, and the unwillingness of states in forcing private lenders legally to partake in debt restructurings. So the questions for today's panel discussions are: how can the international community contribute to solving sovereign debt crisis in developing countries in the wake of the pandemic? And how can the world build better systems for preventing future accumulation of unsustainable sovereign debt? And what are the legal and political measures needed in order to achieve these outcomes? And also there will be questions from the audience and answers from the panel section at the end of the talk. And you can also post your questions in the comments section under the live stream on Facebook. And I would encourage everyone to post your questions during the panel. You don't have to wait till the very end, that makes it easier for us. So in the panel today, we have some wonderful international experts on the topic. We have Bodo Elmers. He is the director of Global Policy Forum's financing for the Sustainable Development Program. And we have Astrid Iversen, who's an associate professor of law of the Inland Norway University of Applied Sciences. And Jerome Phelps, he's head of advocacy at the Jubilee Debt Campaign in the UK. And my name is Thea Sofie Rusten Grasveit. I'm a policy advisor with Debt Justice Norway. So let's just get to it. Bodo, can you give us some details on what brought us into the situation of unsustainable debt and what consequences it has for the current situation? Will you just give us the details, what's going on?
Sure. Thank you, Tia. Thank you for the introduction, and good evening to everyone in Trondheim and to everyone on Facebook. It's a pleasure to participate in the discussion today. I think it's an extremely timely and extremely important topic we're discussing today. Indeed, debt problems have emerged as one of the key central challenges for sustainable development, for human well-being in general. And this situation, as you said, Tia, the debt problems were already building up before the COVID crisis, and things just got worse since the crisis started. We never had so much debt on this planet. Debt to GDP ratios have in the meantime reached, only public debt to GDP ratios have reached 100% of GDP worldwide. That's up from 65% of GDP 12 years earlier. So it's an enormous increase in debt. And while this is not a big problem for rich countries, I mean, in rich countries, the situation is mitigated by the fact that we have essentially a zero interest environment. So our governments in rich countries can borrow at zero cost, but developing countries cannot. When developing countries borrow, especially from the private sector, they pay interest rates that can reach 10% or more. So it's an extremely expensive form of debt they're getting. And especially the private debt is extremely expensive. So, well, the consequence of all this is, of course, that debt service costs have been rising steadily over the past decade. Developing countries now pay average 20% of their tax revenue on debt service. In the worst group of countries is actually the small island development states, countries in the Caribbean, the Pacific, they pay even 30%. So, but in developing countries overall, 25% of tax revenue of the budget get lost. And each of course, each dollar, euro, krona that goes into debt service is a dollar that's not paid for health services, for education services, for social protection. Actually, in fact, the UN Secretary General just mentioned it last week at the Financing for Development Forum at the United Nations that now 25 countries spend more money on debt service than on health service, education services, and social protection together. So this is, of course, a very drastic situation for the development of the countries and the well-being of their populations. Well, how we got to this situation? Well, I mean, debt crisis, usually the main thing that triggers debt crisis is actually shocks. Shocks, they can come in different forms. For some countries, it's natural disasters, especially small island development states have been hit by hurricanes recent years. They, of course, destroyed the economy, created massive damages. This is how you can end up in a debt crisis. The COVID crisis as such was, of course, a massive shock for developing countries. Commodity prices fell, remittance flows collapsed, investment collapsed, capital was fleeing, there was a massive wave of capital flight. So this caused debt crisis in some countries. And yeah, but they also, I mean, and currently we didn't have as many defaults on debt as we expected to have earlier last year. Last year, 5 countries defaulted on their debts. I'm not sure if this is a good or a bad situation. In fact, I would say that would be, given how high the opportunity costs are of continuing debt service, would probably be better if more countries would stop paying. But at the moment, there's so much liquidity, so much hot money in the markets that they can refinance their debts, although they are essentially insolvent or bankrupt. So, but I mean, this might change. And the next shock, the big shock, which is probably going to cause the huge, big next debt crisis, when interest rates are going to rise again in the global north. This is also not new. This happened in the 1980s before, the so-called Volcker shock. And now we have the situation of the extremely high debt levels, and this card house will collapse as soon as global interest rates are going up again. But yeah, I mean, how do we get there? I mean, besides shocks, one thing that causes debt crisis or that causes debt problems is irresponsible lending and borrowing. This can come in different forms. Of course, you can borrow just too much, or you can lend too much, and you can do it for different purposes. I would say, I mean, in the debt community, debt is always a social relation between two parties. For entering into a debt relation, you need a lender and a debt and a creditor to agree to. This is why also when it comes to responsible lending and borrowing, we talk about the co-responsibility of lenders and debtors to prevent and resolve debt crisis. This is, unfortunately, this is more like a philosophical or normative concept, and the institutions to make this happen are actually not in place. So actually, when we look at the prevention of debt crisis, as well as when we look at the resolution of debt crisis, there are massive gaps. There are massive institutional gaps in the international financial architecture. On the prevention side, for example, I mean, you can think about regulating the quality of lending and the quantity of lending, and you can think about doing this on the lender and on the debtor side. And at the moment, only the quantity of borrowing is somehow regulated. So in many countries, you have fiscal responsibility laws. In the EU, you have, for instance, the Stability and Growth Pact that limits how much countries can borrow. In developing countries, you often have the IMF imposing rules on developing countries through the so-called IMF debt limits policy. So the IMF can stop countries from borrowing more. But in fact, there's no restrictions on lenders, basically. And the problem we had in recent years, since the global financial crisis, and Thea mentioned in the beginning, there was so much hot money in searching for investment opportunities for yield, basically, that many of these investors from our countries, from the global north, bought high yield bonds from the global south, and basically have pushed developing countries into a debt trap, which were definitely desperately seeking resources. So that was the quantity type of thing. And on the quality side, there are, of course, many. I mean, if you use debt for good purposes, then even for productive investments, which might even also include health and education purposes, even high amount of borrowing shouldn't be a problem. But of course, there are always issues related to, I don't know, we have corruption scandals in Mozambique, or money spent on warships. Basically, we had situations in Chad where famous big resource extraction companies basically designed debt contracts in a way that all the risk of commodity price collapses fell on the borrowing side. So there are many different irresponsible sides of debt. A responsible dimension to it, and there's a massive regulation gap which we're trying to fill for a long time now. The Norwegian government was very engaged in this for many years, including working with international organizations like with the UNCTAD on developing so-called responsible lending and borrowing principles. These even exist. The UN has adopted some, the UNCTAD. There's also a similar set. The G20 has adopted a parallel set, a different set to the UN, the so-called operational guidelines on sustainable financing. But the problem is, Astrid is better. Astrid is a lawyer of us, so she's better than this is basically all soft law, so it's not enforceable. There's not even a strong accountability mechanism related to it. So that's the prevention side. There are massive regulation gaps basically, and on the resolution side, and this is where I stop. It's actually interesting that sovereign debt is the only category of debt which is not regulated by any insolvency framework, by any insolvency law or an insolvency court. So when a private firm goes bankrupt, you have an insolvency law that clearly tells all parties what to do. Basically, there's an enforceable mechanism. It's a predictable system. If it's fair or not, it's a different question, but it's simply regulated. And there's also a decision-making body. This is not the case in sovereign debt. This is basically, I think last week at the UN, I called it a state of anarchy. It's a bit polemic perhaps, but in the technical debate, we call it a non-regime. It is basically, there are simply gaps. There's institutional gaps. And there are, smaller informal bodies that try to fill these gaps. Famous is, of course, I think most of you heard of it, the Paris Club, which is trying to coordinate the bilateral creditors. But it's very difficult, especially regulating the coordinating private creditors in a debt relief process is extremely difficult because there's a lack of institutions to do so. And this is actually where we stand now. And this makes it almost impossible to include the private creditors in a coordinated debt relief exercise, in a coordinated debt restructuring exercise. And this is actually one of the key challenges we are currently dealing with, because you might know there is a debt relief at the moment, or at least a debt moratorium in place for low-income countries, the so-called Debt Service Suspension Initiative. But it's basically only the public creditors, the bilateral creditors participating in it, while the private creditors do not. And the consequence of this is basically that we don't get the savings that we need, because the private debt is the most expensive one. And also that it's basically an unfair burden sharing, because it's basically, of course, the public sector bailing out the private sector again, so to speak. And yeah, this is one thing to tackle basically. And this is where I stop, because on the legal side, I think Astrid is much stronger than I am to follow. Thank you.
Thanks so much, Bodo. It's very comprehensive and a very good overview. So Astrid, getting private lenders to participate in debt restructurings is very important if we are to succeed in reinstating sovereign debt sustainability. So will you tell us what we can do to bring about this participation? Are there any legal options, or are there not? Can you give us the details?
I will at least try. And I will also want to say thank you both to Studentersamfunnet and Slug for inviting me. And I'm also, like Thea said, I'm also based in Oslo. I'm very envious of you guys in Trondheim. We're allowed to gather and hang out in a pub. Anyways, I'll try to get into some of the details on how to increase private creditors' participation. And first, before digging into it, it's important to understand why it's difficult to get private creditors to participate in a debt restructuring. And Bodo was hinting at it several times, but it's just to be clear, a sovereign debt or sovereign debt instruments is basically a contract. So it's a contract between the debtor and the creditor in different forms. But so to restructure, meaning to cut the nominal value or to reduce the interest rate or delay payment, it is necessary to renegotiate the terms of the contract. That's kind of the basic starting point. And to renegotiate something implies then that the creditors actually has to voluntarily accept the new terms. And to cut nominal value or delay payment means economic or loss for the creditors. So as a starting point, the creditors do not want to accept this. In addition, when there's a lot of creditors, all the creditors are kind of hoping that the other creditors will take the loss, but they just sit back. So there's a free riding problem. This makes the participation of private creditors very difficult. And as Bodo also said, there are no insolvency or bankruptcy mechanisms in the area of sovereign debt or state loans. There's no in national law and no really comprehensive system in international law. So the debtor state does not have any form of protection similar to that of private persons in national law and national bankruptcy law, and companies, for example, in domestic or national law also have protection under bankruptcy rules. States do not have any such protection. So the starting point is kind of hopeless. But then what are the options? First of all, you can try to persuade the creditors into accepting. So you can come up with some carrots. For example, you can offer them cash payments when you're negotiating with them. So we call them some sweeteners, or you can guarantee them higher payment in the future. This is also very time consuming to do this in a negotiation process. So like the reality, you really need some force as well. You can't just persuade them. You need some sticks in addition to the carrots. And there's different options to come up, or like the different stick options. The softest version maybe is to put certain sticks into the contract that we talk about, the debt contract. Another possibility is to change international law, and also you have some options of changing national law, because all these contracts are regulated by national law normally. Some are also regulated directly under the national law, but most of the private, or all of the private creditors, all the debt that the private creditors hold are regulated by national law. So you can also come up with some national legislation that could force creditors to participate. And we have some example of all of these kind of sticks. The most famous one, or the most used one, is a contractual tool that you call collective action clause. So this is the nitty-gritty lawyers information, but it can also be very sexy and fun. But it's a very common tool, and it's what we call a majority tool. So you get, like in a renegotiation situation, if you have this contract clause in the contract, the majority of creditors can kind of vote and say, we want to participate in this debt restructuring, and then it will bind all of the other creditors who initially don't want to participate. And this contract tool has kind of been pushed and supported both by the IMF. It took a while, but then now also IMF and G20 and the EU support this tool. But as I said, this is a contractual tool, and that means it's voluntary to put into the debt contracts. So many countries have started to put this in, but not all. So it's not like a bulletproof system. And also, as I said, it's a majority voting tool. So you really need to get the majority of creditors to participate. And that's often also very difficult. So it is a huge improvement, but it's not going to solve all the sovereign debt problems that we have today. But it's better than nothing. And then also, as I mentioned, you have the possibility of enacting law on a national level. And then today, most of debt contracts are subject to either English law or the laws of New York. So if we're able to make some smart legislation in those jurisdictions, that could also help forcing creditors. So there are certain legislation in the UK and in Belgium and France that to a certain extent, I will not go into the details here, but they kind of limit creditors' right to enforce and to claim payment. But these also have kind of loopholes, but this is an option. But the lobbying of creditors are quite strong, so it's proven pretty difficult to have these legislation in national law. And maybe Jerome will talk a bit more about this. I'm not sure, maybe. But this is an option. And of course, it's also an uphill battle because you need legislation in all the different countries to really make this system work. The jurisdiction where you have most contracts, it would be really good if they could enact it, but you will still find loopholes if maybe the creditors try to enforce in a court in a different country. So in the end, you need legislation in all of the countries of the world. So this is also pretty time consuming. And then you also have possibilities in international law. And since this is kind of an international problem, when a state has debt, the creditors come from countries all over the world. And you see attempts to sue in different courts, and it's a really cross-boundary problem. It's not only situated in one country, so that's kind of an argument in favor of having an international solution as well. As Bodo said, there are certain guidelines made by UNCTAD and the UN General Assembly, but these are what we call soft law, so it's not binding. It's suggestions and best practices, but a lot of countries, especially the Western countries, are very critical and have chosen not to do anything about it. So there are some good thoughts out there, but they kind of just there. They're not what lawyers would say hard law. One, like I was about to say, end on a positive note, I'm not sure, but there are other possibilities in international law except from making a huge international agreement between all of the world countries. We have seen that in certain situations, extreme situations maybe, that countries have come together to solve concrete problems. One example, and you can also criticize this event, but the United Nations Security Council actually came up with a resolution after the fall of Saddam Hussein's regime. And they adopted, the resolution said that simplified though, but no creditors can use litigation to collect unpaid sovereign debt against Iraq. Like the aim of this was, of course, that, or you can say that the US wanted the resources to stay in the country so that they didn't have to pay more to rebuild the country that they invaded. But still, it was an example that the countries of the world got together and adopted a resolution in a specific situation, and which was extreme. The argument is that if there is a risk of for the security of a country or breach of world peace, you can have a Security Council resolution that is binding upon the whole world. So in extreme situation, this is kind of a short-term solution that is available. You can discuss whether that is possible in certain countries in relation to the COVID pandemic, but it has to be in like really extreme situations. But that is one possibility in international law that kind of doesn't require all the countries, or at least all the rich countries, to agree on making national legislation and coming up with a whole revolutionary system. So that was some preliminary thoughts of existing possibilities of getting private creditors to participate.
Great, this is so good. Very comprehensive and also a good freshing up for me, even though I work on these issues every day. Thank you so much, Astrid. Jerome, of course, the UK is a very important actor on these issues these days. The UK is both the president of the G7, the COP negotiations, the climate negotiations, and as Astrid mentioned, also probably maybe the most important jurisdiction for developing countries' private debts in the form of government bonds specifically. So if the world is to set up better systems for ensuring private lender compliance in sovereign debt restructurings, there's a need of political will for system change. And at this moment, it seems like the political will is a little bit wonky. What do you see as a sort of a possibility of pushing through these political changes and sort of gaining momentum and political will within the UK specifically? Do you see any sort of silver lining in engaging the UK or other big nations in structural changes?
Thanks, Taya. Thanks for the invitation to be here. Very exciting to see the inside of a bar for the first time for a very long time, even if it's just on a screen. I think, the question of political will is a huge one. And the first thing just to reiterate really, as Bodo has set out, the problem is huge and it's going to get worse. And that is going to have to have an impact on on the reluctance to step up from global north countries like the UK. Africa's spending 3 times more on debt repayments to banks and speculators than it would cost to vaccinate the whole continent against COVID-19. African governments are expected to pay $23.4 billion in debt repayments to private lenders alone this year, even setting aside debts to countries and multilaterals. And some of these private debts have been sold on multiple times at knockdown prices because they recognise that they're very, very high risk. So some companies would make up to 250% profit on these high interest loans if they're actually paid back in full. So this is proper profiteering. And these same private lenders have refused. Zambia, for example, requested to restructure its loan and the private creditors just said no. So it's currently there's been virtually no sign from private creditors that they're willing to respond to the fact that we're in a global health emergency and contribute. The response of the international community, the will coming from from the G20, in fact, which is the body that is setting the agenda on this, sadly, is totally inadequate, as Bodo has said. The main focus at the moment is on something called the Common Framework, which is a structure that is intended to be the framework for debt restructurings for some 73 of the poorest countries in the world, to restructure their debts with countries, with multilateral lenders and with privates. But it's so full of holes, you almost question whether it's intended to succeed. The IMF and the World Bank, 2 of the biggest lenders, don't seem to be involved at all, or they're not required to do anything. IMF have cancelled a bit of a few debt payments temporarily, but there's no process to compel the private creditors to be involved. There's no clear upfront setting out of what the process will look like at all. So in effect, Chad, for example, which is in a civil war situation, the president died this week, has to somehow find lawyers to sit down with BlackRock and the IMF and the G20 lenders to renegotiate its highly complex debt. It's simply not a fair playing field. Why is there not the political will? The UK, as you say, is in a really critical position here and could contribute to this through its G7 presidency, and because the majority, in fact, of African debt is governed by English law, one of the many leftovers of colonialism. But there was a moment earlier in the year where there was some legislation being proposed in New York, and we were getting some indications that the UK was interested in exploring that option if the Americans were going to do it. But it seems like that moment has passed, and they are currently not. Currently, the UK position is that in the face of private creditors' wholesale refusal so far to do anything to restructure debt, the UK position is that they really, really want private creditors to participate in restructuring debt. They're going to ask them nicely again, and they're going to set up some committees to ask them nicely, and they're sure it will be fine. What's behind this? I think our understanding is that there's a consensus across the major lenders, the Paris Club, the usual suspect, big rich country lenders, that they don't want to rock the boat, they don't want to upset the banks. They particularly there's a concern that if they do anything to upset the banks, then banks will suddenly stop lending to global south countries overnight, and all the global south countries will be unable to refinance their debt or borrow to respond to COVID, and they'll all be suddenly desperately turning to the IMF and the UK wanting loans directly from them. This is fantasy. As Bodo points out, they're paying up to 10% interest. Privates are not lending to global south out of benevolence. It's because that's the only place they can get high returns on their investments. UK, I think, is particularly concerned about, in the context of Brexit, that the banks might leave the City of London for Frankfurt or somewhere else. So there's and we have, unfortunately, we have a very corporate-friendly government that is congenitally averse to annoying privates. But there are also concerns that global south countries are themselves very concerned about their access to private credit, and don't want to restructure their private debts because they think they won't get more loans, because they don't get enough access to cheap credit. Particularly, many of the most indebted countries are middle-income countries, as Bodo mentioned, often small islands in the Caribbean who are in debt because they keep having to spend vast amounts rebuilding after hurricanes. Private sector, then they're very keen to preserve their creditworthiness and keep putting their budgets into paying down their debt or the interest on their debt rather than vaccinating their population. So this response is just not going to be adequate, though. The problem isn't going to go away. There's a pretty strong consensus among economists, even mainstream economists, that we are, as Bodo says, we're on the brink of a major debt crisis. Power is to address this is with G7, G20 primarily, IMF, World Bank. These are not spaces where global south countries have much influence. The UN, where they do have more influence, is quite marginalized in this. So it's not a system that's been run in their interest. I think we need mobilization pressure in privileged, rich, white countries that make these decisions, that just as vaccine apartheid is not fundamentally unacceptable, debt injustice is going to cripple the global economy and cripple the development of global south countries for years, decades, if we're not careful. So we're campaigning particularly on the UK to introduce legislation to facilitate write-downs of private sector debt. We did a stunt of getting projections of drop the debt on the City of London headquarters of lots of the big banks, and we had about 10,000 supporters sending emails to the banks demanding they drop the debt. So we're hoping to build up this pressure so that when it gets to the point that they have to, the G7, G20 have to start making difficult decisions, they've heard from their populations that there's moral, ethical pressure to solve this. Thanks.
Thanks so much, Jerome. Oh yeah, there's so many interesting aspects to pick on. Bodo, I want to ask you, as Jerome was touching upon, there is a need for a sort of more comprehensive solution when it comes to debt restructurings. There is this common framework from the G20, and it's sort of fragmented and not very useful. And for a long time, there has been talk of a sort of a comprehensive debt resolution mechanism, preferably within the the UN system, as this is more of a democratic multilateral platform. Bodo, can you say something more about sort of what is this hole in the global debt architecture that needs to be filled? What should this debt resolution mechanism look like?
Yeah, well, the discussion is ongoing for many decades already. Astrid also pointed to it a little bit. Basically, I mean, the closest we ever got to something that was like an international insolvency regime was when the IMF came up. So I think that's almost 20 years ago, with the idea to have a sovereign debt restructuring mechanism. Basically, I mean, the idea of a mechanism is, I mean, one thing that's needed is basically to have a space where you can restructure all debts in one single process. Basically, at the moment you have, I mean, you can negotiate bilateral debt with the Paris Club, but there you don't even have the Chinese participating. This is what they're trying. This is actually the only thing they're trying to achieve as a common framework, is to get China under the roof of the Paris Club, basically, so that the bilateral creditors coordinate their restructuring efforts. It's basically more like the big game in geopolitics. That's more to do with this than with debt restructurings. Then, of course, I mean, bondholders, and as the point is that there's no place where to convene bondholders. You always have to call these creditor committees, and then you have no guarantee that anyone is participating. And then you have voucher funds who make a business model of not participating, but litigating instead. And in fact, I mean, there's definitely no space where you can have the bilaterals, the multiples, and the private all in one room, basically. So the idea would be something to have a mechanism that can organize a huge, well, I mean, a comprehensive debt restructuring process, and can do this very speedily, because at the moment, these parallel negotiations that debtors have with different creditor groups that can last, I mean, including all the lawsuits related, it sometimes takes a decade, basically, to get through the whole process, basically. And this decade for the debt country usually becomes a lost decade, basically, because you have all these economic distortions while you're in a debt crisis and while you're renegotiating your debts. So a speedy process, similar like basically a court case at an insolvency court, basically something speedy. And of course, I mean, we're from, most of us are from civil society side, from NGO side. And for us, it's not just to have an orderly process, but it is important, and this thing is also flagged about debtor protection, that in insolvency laws, you usually have some sort of human rights dimension. So basically, when you as a private person in a civilized nation go bankrupt, they cannot take your basic foodstuffs away, or your bed, or your housing unit, basically, because basically your basic needs are protected. And this is not the case currently in sovereign debt crisis and in sovereign debt negotiations. So we also try to link debt restructuring basically to human rights aspects, to have human rights assessments, and to have human rights and development needs considered in debt restructuring processes. And of course, for doing this, you would need some sort of institutions. You would need, I mean, there are different terms circulating, like a global debt authority or a sovereign debt forum or so, and some sort of legal framework. I mean, this is, in my view, the two dimensions. You would need an institution that can act as a convening space and can make decisions, and you would need to have a legal framework that can govern it, and in the best case, some sort of law that is globally enforceable and that takes human rights needs and also development needs into account. I mean, development needs, as you know, my day job is in financing for sustainable development. I find it extremely cynical that we are asking developing countries to finance the Agenda 2030, and we measure them against their progress and assess them against the progress in doing so, but we don't give them the tools at hand, the resources at hand, of making this possible. And debt relief or the speedy resolution of debt crisis is definitely one tool. And if we take our international agreements that we all signed onto, like the Agenda 2030, seriously, you also have to basically put these tools in place. And a debt restructuring mechanism or debt workout mechanism would be, of course, a key thing, basically.
Thank you so much, Bodo. Astrid, it seems like there's been a lot of arguments from states, basically, countries in the Paris Club, the G20, also the Norwegian government lately, that sort of a statutory approach to compel private lenders to contribute to debt restructuring is somehow undesirable, that the private sector will sort of hold a grudge, and this will sabotage all future borrowings, and developing countries will never again access private finance for development, basically. But at the same time, I've heard other arguments from the private sector themselves. There was a representative from the Institute of International Finance that said that private lenders operate within the legal framework, and if the legal framework is changed, they will change their operations accordingly. Basically, that's it. And that private lenders are mostly afraid of volunteer solutions that will enable some parties to freeload, or on this, that they want enforceable, universal legal solutions that bind the participation of everyone, because if I'm going to participate, I want the insurance assurance that everyone else is forced to do the same. What do you see sort of the chances of advancing this legal approach to debt restructurings? Do you see a possibility for strengthening those aspects, or do you see it as sort of like a lost case to get enough political will to change these systems?
Well, I see there's a lot of chances to change the current system, like tiny steps here and there. So it has, for a long time, there's been a problem with getting both countries who lend money, as well as private creditors who lend, to get them to participate. So no one wants to lose money, so it's always a problem. And now, because the past maybe 20, 30 years, you've seen an enormous increase in private creditors. So you shifted from a situation where states borrow mainly from other states and international finance institutions such as IMF, the World Bank. And there's a shift, and also these kind of loans you call bonds, as we'll refer to all the time. And so now I think the majority of all sovereign debt is in private hands. Still a lot of also in the hands of states, but still it has increased a lot. And that's also why we're talking about how big a problem this is at the moment. And we all the time now refer to the G20 common framework, which is kind of G20's solution to the current increasing debt problem. But if we think back to what I said, that everything is just a contract, the debt, so the G20 can only bind, since they haven't made legislation, it's just an agreement among these countries. So it's only they who bind themselves to accept to reduce the debt. And this is not binding for the private creditors, of course. But going back to the private creditors, they have always said that we don't want any change, and certain creditors have a tendency to scream louder than others. But and every time they've tried to come up with new legislation, both what we call vulture fund legislation, but just the domestic or national law legislation, there's always been people saying this will ruin the financial system in our country. It happens every time. It happened in the UK, France, Belgium. But this is not a legal point, that is a policy point, but there's always in these countries, there's been pretty strong civil society organizations who have lobbied for, and actually in all countries, the legislation is still in place. And in the UK, they said this is just a preliminary legislation. But when the first years of testing, they said, no, we'll make it permanent. So the private creditors said it will make the interest rate go up, so it will become more expensive to borrow for the debtor countries, for the poor debtor countries. But no, it didn't really happen. It was the same when they introduced and pushed for these contractual tools that I talk about, collective action clause. A lot of creditors said this will ruin the market, the poor countries will not get access to the market, and it will be so expensive. There's been a lot of research, and a bit going in both directions, but almost the majority of research said there was no increase in interest rate, and if there was, it was very, very, very low. So private creditors will always lobby, it seems to, that the private creditors or certain will use a lot of resources to lobby against it. But as you said, it was actually an interest organization for private creditors who came up and kind of changed or amended this collective action clause in 2014. So they're in favor of it. Of course, it has to be somewhat balanced, but in general, some private creditors are against it, but it's not like all the creditors in private sector are the same. It's important to remember that even though some will say this is very bad, there's a lot of people, and private creditors are not only like bad guys, there's a lot of private creditors who would support or understand the need for. So private creditors can be everything from big banks, small banks, pension funds, private persons, very rich private persons, retail investors. So there's a lot of different creditors, and we've seen time and time again that some creditors, those who are more high risk or like willing to take high risk, they kind of free ride on other creditors, and the other creditors do not like this. So what in general it looks like private creditor wants is predictability, and that could also be a stronger legislation, stronger contract clauses. So yeah, predictability and avoid free riding from others. It's just as important than just staying hardcore, never restructure. So I think we have seen, and there's still a need to kind of shift the discourse among private creditors, and also among, even more among states, because they are so open to this argument of certain creditors that I'm a bit shocked that they're so easy to convince when you hear a lot of Western countries just repeating these very simple arguments that it will ruin the market. Of course, I'm not in the UK, and Brexit is, I'm sure it's very difficult in this environment to argue because they're so afraid that all investors will go away to Frankfurt. But it's like, it's a bit silly, these discussions or simplified. So I think there's a lot of room, and as I said, policy or campaigns have proven to work. So I just think a lot of organizations need to push and stay in the debate, even though we don't have, or civil society don't have as much money as a lot of these investment funds that are against this legislation. I think there is room.
Thank you so much, Astrid. I think it's very interesting because, like, lately when we've talked to different governments, some of the most conservative and comments and arguments have come from the states themselves, while the private sector have been more sort of progressive and solution oriented. And there was this other guy, a private sector representative in the panel discussion, who basically said the exact opposite of the argument that we've been hearing from the governments and the Paris Club. He said that private lenders will know that this is a systemic default, and they will not hold it against individual countries if and when they default, because they know it's a systemic fault, and that private lenders hunt for yield will mean that they will not sulk in the corner for long. They will be back in the game quite fast when they see developing countries returning to debt sustainability and returning to markets, and they will be back in the game quite fast, was his argument. And also he said that he was arguing for preemptive debt restructurings, because he said the longer we wait, the worse this will get for both parties, for developing countries and for private lenders. It's better to just get on with the restructurings, get on with everybody's lives, and that countries should not worry about losing what they've already lost, meaning market access, was his argument. Market access is lost, don't worry about losing it, just get on with the restructuring so everybody can get back to normal. The other aspect I wanted to ask you about, Jerome, is that around the year 2000 there was this big global campaign called the Jubilee 2000 campaign. This was the last time a lot of developing countries were in a debt crisis at the same time, and it was a global campaign. I think it was 21 million signatories on this demand for debt cancellation for developing countries. And of course, this was very was a huge success in the sense that there was a big debt relief effort globally, and a lot of developing countries came back to sustainable debt levels, and then it was lost again because we failed at strengthening the systems for responsible lending and borrowing. So we got back in the same situation 15 years on. So that's the other aspect that Bodo was talking about. But how to sort of remobilize this global effort? Do you see any like sort of way of remobilizing popular support for this? As you said, people in the global north need to be engaged in this in order to mobilize enough political will.
Yes, I think there is scope. I think it can be one of the key moments going forward. I think the moment the biggest energy is around vaccines, and there's a lot of I think there's a lot of growing realization of the grotesque injustice of countries like mine hoarding huge numbers of vaccines and vaccinating its population whilst other countries in the global south have hardly any. And I mean, I wouldn't necessarily disagree that that's probably the biggest immediate winnable situation. But even if whatever happens, even if they do suspend patents for the vaccines, we're going to have a protracted situation where global north countries are largely white people are largely vaccinated and brown and black people are largely not vaccinated. That is going to be, we haven't got there yet quite, so I don't think it's being felt yet, but that's going to be a hugely problematic situation. That's going to, I think there's going to be a real political moment globally around that. And I think the additional complication of these countries that are flat out trying to meet the challenges of COVID on their population, trying to vaccinate, even if they get vaccines, they'll still need to pay for healthcare staff to administer them. And they're still going to be paying out 2 or 3 times as much on their debt repayments as they're paying on healthcare. And as a result of their failures, their inability to vaccinate their population, they're going to be generating new mutations that will then cause risks to shutting down economies of important rich white people. So I think there's I feel like there's a perfect storm of factors, debt being one, alongside the grotesque inequalities around vaccine access and ability to respond to COVID, that are going to make it generate a lot of political, actually self-interested political pressure in the global north to not see the global economy, not see global health sabotaged by debt, amongst other factors, keeping global south countries on their knees for protracted periods. And I think, but that is going to, so I think there's going to be a huge opportunity there for another Jubilee 2000 type moment, but it will need mobilization. It will need popular pressure on governments that, for the most part, are, as I say, have got, these parties exist to privilege corporates' profits over public welfare, and that's is going to take a huge push to get any rebalancing in favour of lives and livelihoods in the global south over corporate profits in London and New York.
That is so true. Thank you so much. We're going into the question and answer section now, but in the end, at the end here, I just want to say that yeah, I think there will be a sort of need for a huge mobilization, and I think to generate political will, sufficient political will, but that this time we sort of have to succeed in both the aspects. We need to solve the immediate debt crisis, and we also need to actually come out of this with the strength in the system for responsible lending and borrowing. Like I think that's sort of, I'm hoping that's going to be one of the takeaways also for rich global north governments, that their inability to strengthen these systems the last time around meant that it was money out of the window, basically. Like the whole benefit got lost in such a short amount of time. So I think there will be more will this time. They will see the actual need to strengthen the systems for responsibility, or I hope they will. They will push this changes. Yeah, so we would love to hear what you guys in the audience think, and what you're wondering about. Una, I think you said that you would pass the microphone around if there are any questions. There might also be some questions from the Facebook stream, maybe. Ska vi se. I'm not sure if I can see Una.
Can you? Yeah, you can hear me now.
Yes.
Okay. If anyone has any questions, just raise a hand. I see no hands. Do you see the stream? Are there any questions from the Facebook?
No, I'm not sure. Actually, if there are no questions from the audience, actually, I have a question for the audience. This topic, I'm assuming that a lot of you guys in the audience here are probably students of social sciences or economics, or that you have a general interest in sort of north-south developing topics. Is this that the situation that a big number of developing countries are entering that crisis because of the COVID? Is this sort of like a totally new topic to you? Is this something you've heard about, or is it new? And if it's totally new, what do you guys think about sort of the chances of bringing some attention around these issues within sort of students, specifically in Trondheim then? If there's anyone who wants to reflect on your own sort of potential role in mobilizing around this. It's a little scary. I'm sorry for putting you on the spot. If nobody dares, then Una can say something.
Yeah, I can at least say that I haven't thought about debt being a special problem with the COVID pandemic, but it makes sense, of course. Everyone is talking about economic problems due to the pandemic, but it's easy to think about the problems here. In Norway, we have problems too. But of course, the people or the countries who have debt already have even greater consequences of the pandemic. So, yeah.
Yeah, I mean, it's. I think that's at least for me, working on these issues every day. It's as a Norwegian, and a Norwegian, it's very sort of easy to forget how incredibly privileged Norwegians are in a global. Of course, we know this already, but the government pension fund global is, the biggest sovereign wealth fund, and this is actually sort of like the key to what we call counter-cyclical measures. If there is a financial shock, external shock, the government needs to spend money to keep the wheels turning, and basically the only way to do this in a sustainable way is to have savings. To do in a period of high earnings, you put some money aside, and when there's a rainy day, you can spend your savings. And of course, the Norwegian government pension fund owns roughly 1% of all stocks globally, and we're a population of 5 million people. So that's it's ridiculously privileged, of course, and it's sort of easy to forget that in a Norwegian context, you can just like swipe your card, the government can just swipe the card and, you know, it's paid for, basically. And I think it's roughly around 100 countries globally now that has entered into discussions with the IMF or entered into a crisis lending agreement. So that's sort of like magnitude is over 50% of the countries globally are asking for crisis financing, crisis loans, because they don't have savings. What they have is already unsustainable debt levels, and especially developing countries. It was 34 low-income countries were already in the debt distress or high risk before the COVID pandemic, and that was, we only have data for the low-income countries. Middle-income countries, you don't have data for that. But yeah, like Bodo said, the global debt levels were record high before the COVID pandemic. So this is going to be like hugely important in the time to come. And I think when we're out of the woods with the sort of the immediate threats of the ongoing pandemic, I think this is going to be one of the biggest challenges that we need to address. Astrid?
I also have a kind of comment or question, but not to the audience though, but maybe the others in the panel. Because it's very fascinating and sad that so many have rushed to the IMF to ask for help. But then also, one can also use the IMF or ask the IMF. Maybe this is dangerous, and maybe that's my question for Bodo and Jerome. You could kind of ask the IMF to be stricter, and they could also say that if we are to help countries that is kind of dependent on private creditors also participating or canceling a certain amount of debt. Of course, it is risky because, or can be risky because then maybe the private creditor still won't help and the IMF won't help, and then it really gets bad for the country. So there's a risk element. But you, for example, in the Greek sovereign debt crisis, you saw that IMF was much more willing to push private or to make a clear statement that for this debt to be sustainable and for it to be responsible for us to actually help, to give more loan to a country in a severe debt crisis, you push for, the IMF said, we need private creditors to chip in and cancel some debt. If not, like Greece would have way too much debt. So that is a situation where you saw that IMF pushed further. So my question is more like, could we policy-wise also push our government to ask the IMF to put stricter demands on their lending, or is that a bad idea in this situation?
I think our position on this actually is a slight variant on that. It's perfectly possible for the IMF to make those demands of private creditors. Well, so to demand that debtor countries and ask for a restructuring of private creditors, but that if private creditors refuse, the debtor country should default, and IMF should continue supporting it. They have a policy where they can lend into arrears, they can support countries to default. And I think this goes to the point that I think Bodo made earlier, that actually it would be healthy if there were more governments defaulting on unsustainable debts that they can never pay back effectively and that are preventing them from looking after their people. And we need IMF, World Bank to move away from regarding defaults as this terrible thing, to support countries to default and then come out the other end. And the point being that, as has been said, countries that have defaulted, cleared their debt arrears and gone back are actually if they want to get, they're able to get private credit much more easily than others that haven't defaulted and are still laboring under these debt mountains.
Well, just a few remarks from my side. I mean, on your point, Astrid, I mean, it sort of works, but this would imply, I mean, probably when the IMF is not giving money to countries before they really stop paying private creditors, these countries would wait for such a long time that, in fact, they would dry up all other sorts of spending first on health service and education, and it would cause the massive collateral damage. I mean, how I see things going at the moment, it's actually an extremely embarrassing situation for the richest and powerful countries of the world, because they tried for 1 year now to include the private creditors, the BlackRocks of this world in debt restructuring exercises, and they failed to do so. And now they come forward and argue, I mean, what the common framework basically does, it says you can only get debt relief from us, from the rich countries, when you also ask debt relief, the private creditors for debt relief. So they're now, after they failed to engage BlackRock and co, they're now putting the burden of engaging these super powerful economic players on the government of Zambia and the government of Chad and the government of Ethiopia, which are countries which are at the moment in an extremely, I mean, they basically stand with the back to the wall because they're in a debt crisis, and these are countries anyway which have extremely low capacity and extremely low power. So basically our governments are the most powerful countries in the world, basically failed to engage the private creditors, and now they say, well, it's basically now up to you, indebted African countries, to make sure that this happens. And this is extremely lousy, just well, basically to say so, basically from a political economy point of view. And yeah, I mean, what has been discussed in a technical debate on debt restructuring, so I think Astrid, you're probably familiar with that, is if we should have something like an automatic trigger mechanism for debt restructurings, because we have a problem that is called too little too late. That's, I mean, often it's known to everyone, including for the creditors, that the situation became unsustainable, but the debt restructuring process starts usually too late, and the amount of debt restructuring is usually too little, and that's to the harm of all parties involved, including for the creditors. In Greece, for instance, we had this spiral, this austerity spiral, this vicious circle where the economies shrank so much that the country could repay even less debt than before the recession came. So an early debt restructuring had even been an advantage for the creditors, but it's not happening. So there is a discussion if there should be a moment where a debt restructuring or debt relief process is triggered automatically. We, from CSO perspective, we often argue there should be something like a regular human rights impact assessment. And when it turns out that you pay so much, such a large share of your public budget on debt service that you can no longer fulfill your human rights obligations to your citizens by funding health service, education service, this is the moment when a debt restructuring process should automatically be triggered, basically. So this is one thing. They're actually also on the contractual side. Astrid, I'm actually, by the way, amazed. I've heard, I think, hundreds of people talking about collective action clauses on panel discussions, but I never heard that anyone uses the term sexy in the same sentence as collective action clauses. But anyway, there is a contractual way to have an automatic trigger, and these debt instruments are called state contingent debt instruments. For instance, some Caribbean countries are now using bonds or loans with a so-called hurricane clause. And this means when there's a natural disaster, can automatically there's an automatic debt moratorium, so they can automatically cease payments, or the payment terms will be modified to reflect the new situation. So there is a way, and I think both these contractual, the statutory ways would be useful to take because it's always, I mean, it's always politically extremely challenging for a government to start a debt restructuring process. It's never a win. It's never a political win for you to say that your country is bankrupt and to engage in this cumbersome negotiations with all these different creditor parties. So if there was an automatic trigger, it would make it much easier for countries basically to default. And often from an economic point of view, you see the statistics. I mean, often the data speaks very clear, says very clearly that basically, I mean, it's a bankruptcy, so something needs to happen.
Thanks so much. And yeah, there are so many interesting aspects to this here at the end. And I think one of the things, Astrid, also is that the lending into arrears policy is going to be reviewed, I think, coming up this year or early next year. So I'm thinking this is going to be one of the hot topics, like how hard is the IMF going to be pushing? And at the moment, it seems like in terms of lower hanging fruits, if you're talking about sticks to sort of compel private sector participation, I think actually the IMF IMF being tougher and demanding cuts on principles before they will go in with new loans is probably one of the most available sticks at the moment. So I'm thinking it's going to be sort of probably a big debate around that. And also, like Bodo said, I think it's sort of a little bit sad to see how governments are sort of giving their power away. They're just sitting there with their, standing there with a hat in hand and asking the private sector nicely to contribute when they are actually the ones in a position to regulate this. They are the ones with the responsibility of regulating this. So it's really sort of sad and strange to see, this basically ideological view that you're not sort of supposed to regulate the private sector, but in order for the marketplace to function, it has to have proper regulations. So yeah, but I think we're sort of nearing the end of the discussion.
Yes, we have a problem. No, not a problem, but a question from the audience.
Yes.
Hey, I was just wondering, who are the biggest creditors? Is it just IMF, or is it China, or is it JP Morgan or Deutsche Bank? Who are like the biggest lenders, and which country has the most debt? Or countries?
Who wants to answer this? I can say something about the composition of the debt. I think it's when it comes to what we call bilateral lenders, that's the states that loan money to developing countries. I think I'm not 100% sure about like the different percentages, but I think it's roughly around a third that's for bilateral debt, and the by far biggest bilateral lender is China. China has loaned huge amounts of money to developing countries over the last 10 years. And then roughly 1/3 is the multilateral debt, which is the IMF and the World Bank and other multilateral institutions. And then the last third is the private debt. But the private debt is sort of the biggest problem because it's the most expensive debt. So when you have sort of zero or next to zero interest rate loans to multilateral institutions, and you have private loans with 10% interest, this eats up a hugely bigger proportion of your lending expenses. Astrid?
Yeah, so I don't have the detail and the names of the biggest banks, but you can kind of often differentiate between you have kind of two different types of private loans. You have loans to typically bank, and that's the old school piece of paper loan contract. And then you have what we refer to as bonds, and then that's kind of a loan contract where this state or the debtor state sets all the terms themselves, or the idea is that they set the terms, and then they kind of sell it on the market. So then you can have, or the stock exchange, and then you have thousands of random investors buying this debt instrument. So, and the buyers of these bonds can be almost anyone who has sufficient amount of money. So one of the challenges when it comes to these sovereign bonds, which is the main financing within the private debt instrument, is that you often don't know who these people are or who these investors are. It's difficult to trace them. They can be traded every day, and it's difficult to keep track. And that's also why it's very difficult to renegotiate and have debt restructuring, because you have to send out information, send out the restructuring terms to all of these different investors. So there's often a lot of, or many thousands, 100,000 sometimes, investors involved in a debt restructuring. So it's a bit chaotic. So the traditional old big banks can also be bond investors. So that was the unclear, messy answer.
Thanks. And also one interesting sort of aspect there is that at least civil society has been saying for many years, like Bodil was talking about, that there's a hole in the financial architecture, that we need this debt restructuring form, that we actually need an institution with sufficient resources, staff, enough money, and the mandate to host these complex negotiations. Basically one negotiating table for all the creditors, and that could be several thousand creditors, like Astrid was saying. And that this is a sort of a very complex renegotiation, so we need a lot of resources to host it. And just last week, I think the Institute of International Finance, which is this sort of umbrella organization or interest organization for private lenders, they said that there is a need for this type of appropriate forum for debt negotiations in the face of these complex renegotiations coming up. And when they say that there is a need for an appropriate forum, I assume that they mean that the common framework of the G20 and the Paris Club is insufficient. It's not the appropriate forum we actually need. So there is sort of some support from the private lender side that there's a need for a better tool for sort of coordinating these restructurings. Yes, Bodo?
Yeah, just one additional comment. I mean, obviously, I mean, the composition of debt is different from country to country. I mean, in low-income countries, you typically still have a little bit more official debt from creditors like the World Bank or the bilateral development banks. In middle-income countries, it's a larger share of private debt, including bonds. And another thing is that indeed the share of private debt has been increasing over time in the last decade, and this massively. And this is also not a surprise. I mean, on the one hand, it was a consequence of the situation on global financial markets. So as I said, there was all this hot speculative money that was seeking new investment opportunities, and they found so-called frontier markets in Africa. New places for capital to invest, basically, which were very difficult to find in the past decade, and they paid high yields. So this is why investors went there, and many countries in sub-Saharan Africa were also happy that they found an alternative to the World Bank, and they could. I mean, they were no longer. I mean, this was basically unconditional financing. The money from the World Bank comes with very tough policy conditions. So they basically made the deal to borrow from the private sector. But the interesting thing is also that indeed. Development countries were really pushed to attract money from the private sector. This was, I mean, especially since the Agenda 2030 has been adopted, developing countries have been told over and over again, now you have to attract private finance, you have to attract money from the private sector to fill the financing gaps for the sustainable development goals. And this is an extremely weird thing when you follow negotiations at the United Nations at the moment, or in other bodies like at the G20 or the IMF. So you have usually one session which discusses how to involve the private creditors in debt relief exercise, and then comes the next session which talks about how we mobilize more money from the private sector to finance the sustainable development goals. And people don't seem to realize that there's a link between these two problems, basically, and especially that, I mean, that basically that the governments, the same government, the World Bank, our northern governments have basically pushed this dogma, this ideology massively over the past decade. And this is what I'm also saying when it's about co-responsibility of creditors and debtors. There's also a political responsibility that this dogma to attract money from the private sector, which was, of course, very expensive money, because the private sector is not investing in Africa. It's not for free. I mean, they're coming because they're searching for high yields. So this dogma has pushed African governments to borrow from private institutions. And well, now we have the situation that indeed we have, and it was actually clear to everyone, because we knew already 10 years ago that there are no institutions in place to deal with private debt problems when they occur. And this was a very predictable process. So this is all linked to each other. This dogma to mobilize private finance. Also, basically, I mean, it's also linked to other aspects, like the failure of many rich countries to deliver their commitments in development assistance. Basically, of course, this causes budgetary gaps in developing countries, which they fill by borrowing from private resources or tax evasion through tax havens. Basically, this is also linked to the debt situation, because this all causes black holes in in developing countries' budgets, which they try to fill through other sources. So it should be all seen in the package, but especially the link between the pushing of private, attracting money from the private sector, and the current problem to include the private creditors in debt restructuring exercises is a very interesting one. Thank you.
Thanks, Bodo. And also just one comment to that with the last debt restructuring, debt cancellation campaign called the Heavily Indebted Poor Countries Initiative around 2005, the IMF program, this HIPC program, saw to that developing countries were down at almost zero debt levels again, and they could use money on things like health and education and social security and everything. And now that Western countries see that this whole benefit got lost because of the lack of responsibility, I think that hopefully they will be able to sort of see these different aspects linked, because for example, with the World Bank now, the chief economist is called Carmen Reinhardt, and she's one of the world's biggest experts on these types of boom bust cycles when it comes to financial crisis. And after the financial crisis of the 2007-2008, this build up in government debt in developing countries, especially the private debt, had this very obvious sort of boom graph that there was a huge amount of private lenders at the same time, with a lot of hot cash from quantitative easings from the European Central Bank and low interest rates in the rich countries. A lot of private lenders at the same time saw the same investment opportunities in the global south, and because there were lack of proper regulations to ensure responsibility, they sort of just rushed to the party at the same time, throwing money at developing countries, and then you see this the boom of a sort of a bubble, and it's this bubble that's bursting right now. And Carmen Reinhardt is sort of like an expert on this dynamic, and I'm hoping that she's sort of centrally placed in these discussions, is going to sort of inform future policy on this front, and maybe secure more responsibility. Yeah, I think, are there any more questions, or are we nearing the end?
I don't think there are any more questions. No?
Any more comments from the panel, or are we all satisfied? Yes. Okay, thank you so much. And this was a very fruitful discussion. Thank you so much for all your contributions from the panelists, and for the engaged participants in the audience. And if you have any questions around these issues, or if you want to sort of get involved and think this is an interesting topic, you can of course just follow us in Debt Justice Norway, SLUG, Nettverk for Rettferdig Gjeldspolitikk. We have a podcast where you can learn more. We have a Facebook page, Instagram, Twitter, all of those things. So you can just mail or contact us if you want to. And we also have student volunteers working with us. So if anyone is more interested, you can just contact us. And if you have any follow-up questions. But thank you so much to Una and Studentersamfunnet.
Thank you for coming.
Thank you for having us. And have a lovely evening, and I hope you get the chance to have a beer or something. At least enjoy it on behalf of us in Oslo, who are unable to join you. Thank you so much. Have a nice evening.
Well, thank you for the invitation. Bye-bye.